Very good morning to you all. Charles here, FRGNT Daily Chart Analysis. Friday, 14th November 2025. Time has just ticked past 7 a.m. Milano. That's 6 UK pre-London Open. And as always, here to prepare the charts well in advance of our session. So where are we in time and space? So weekly 50 MA, you can see price dipped into that weekly 50 MA. And off it really continued bullish for predominantly the entire week. So let's see where we are on that weekly time frame. Bottom right hand corner to bring your attention there to see if any points of interest on those higher time frames, once superimposed across the lower time frames, will then align with structure for us to build that confluence, and as I say, then allow us to trade with confidence from those areas. So weekly 50 MA down at the lows, but in terms of the here and now, where are we? So we are in around that daily 50 EMA. Previous weekly highs have been filled in terms of wicks, and we do have that wick imbalance right there at the top. But in terms of looking at the range of those daily candles, it's very unlikely that price, even if it does get up to that wick imbalance up at those highs, if I draw that on for you, it's very likely that if price gets up here, we will then see a reaction. So I'm not really anticipating that, to be quite honest, but nevertheless, if price does come up in and around those areas, then we will be looking for our short positions. However, let's see, previous daily highs have been highlighted. Let's see in terms of pip range, how far away. So just 40 pips back up to those highs where price has tapped into that area in that 4-hour order block yesterday. However, with that said, that order block is tapped on the 4-hour, but most certainly if we were to refine that area and see what else is not mitigated there up at the highs, we'd be able to find something, no doubt. But in terms of that 1-hour time frame, here we see that 1-hour order block has now caused a break of structure on that 1-hour time frame. So I'm happy to look into this 1-hour order block and see if there is any refinement there. And as you can see, that lines up perfectly with those previous daily highs. So if price could indeed tap up to that area, then I'll be looking for a short position once the setup and entry criteria aligns. Why would that make sense? So the current candle closed bearish, or the previous daily candle closed bearish under that daily 50 EMA. So that's pretty good news in terms of respecting that daily 50 EMA. So what we'll be looking to see is if today's daily candle will also respect the daily 50 EMA and close bearish under it. So once price, if I were to illustrate to the best of my abilities what this daily candle should do, so we're going to expect it, if I draw your attention to that middle time frame, that daily time frame where I'm drawing it, we're expecting this daily candle then to push up, pop up into that previous daily high, leaving us with a wick rejection to those highs, flip bearish for a continued close below that daily 50 EMA. Now again, as I say, although that may well sound and seem quite far-fetched, all you have to do is look towards that Thursday candle. It did exactly the same, and in fact that's the candle that gave us the previous daily high. So indeed, this is what the candle is going to look like, and that is what we are going to forecast. So that wick on the lower time frame, of course, is going to simply be, if I bring your attention here to the 15-minute chart, top right hand corner, price is just going to trend up into that area. Give us our entry criteria after tapping into that 15-minute order block that we've refined. As I said, we've got that higher probable confluence there with the previous daily highs, so we can expect a potential rejection from that area. So that's what we're forecasting in terms of short positions. In terms of going long in the immediacy, I can completely understand why others would potentially be going after the higher high, higher low created, higher high, higher low in and around that 4-hour 50 EMA for a higher high up into those previous daily highs. So I can absolutely forecast price getting up to those areas. But as I say, is the long position something that I'm looking to get involved in at this time? I have to admit, no, it's not. And I'll explain the reasons why. So although we have the previous daily low there, as we superimpose that from the higher time frame on that daily candle, and of course we expect price to dip into it before its move up to the previous daily highs, I do not, as you can see, have any higher time frame order blocks to hang my trade upon. Now you may well say, well, you're happy to take a short from a 1-hour order block refined. Absolutely. However, if you bring your attention to the left, we did previously have a 4-hour order block sat there that was tapped. Now, in contrast, we have what I say is we do not have a 4-hour order block to our left that we can use as good reference to then refine it down to potentially use a 1-hour order block. But again, if we zoom into that 1-hour time frame, top left hand corner, here would be a 1-hour order block. However, it has been mitigated, so I'm not going to be reusing that. And then again, we have a 1-hour order block created in Asia, again mitigated, so I'm not going to be using that. So in terms of higher time frame, there's simply nothing there for me to build that confluence and start from. So even looking over now into the 15-minute time frame, let's see for all purposes whether there is a 15-minute order block that could potentially be used. And we've got one right at the lows here, but again, I shall zoom into it, but I do believe it's mitigated. Yeah, so you'll see there what I did think was a potential order block. Again, it's been mitigated, so I will not be using that. So at this time, this area, to be quite honest, is just a session low. We have Tokyo to be filled as well, giving all the more reason for price to dip into that area. Let's have a look in terms of Asia. Of course, now I can see there is a 15-minute order block that was created in Asia. But again, you have to ask yourself, trading the account balance that you are trading, looking for those higher probable setups, would it not just make sense to await the higher probable short position from the highs instead of taking a potential long position from in and around nowhere other than previous daily lows and a 15-minute order block created in Asia? Even with that said, if you are going to take that 15-minute order block created in Asia, I need those Asia highs to be broken, then return back into that order block for a lower time frame break of structure before then getting into that position. However, with that said, what I do anticipate is if price does continue its move up, we do hope it simply taps into those previous daily highs, 1-hour order block, 15-minute order block refined before that turnaround in price, before then coming down to those previous daily lows. So you've got to build that forecast and that picture up for yourself. With that said then, if that position was going to be taken, I would need to be looking to cover those Tokyo lows that are still yet to be filled from the previous day. That then increases my stop loss to around 15 pips maximum, whereby my range then is incredibly reduced. a 3R is potential, but as I said, there is more than one reason to lose this trade. If you simply zoom out and look towards that weekly 50 EMA, where we'd be looking to take a higher probable long position, then where would you look to take that position from, risking the percentage that you're trading on your account? Take a long from here, where of course it looks to make sense on those lower time frames in terms of simple structure being printed. However, this position here is one that I would be looking to take the long in terms of looking at that higher time frame confluence. Now, to compare the two, we are in around previous weekly lows, previous daily lows as well, that are still yet to be filled. We have those 4-hour order blocks refined down into the 1 hour, and we also have a 15-minute order block in and around that area as well. Then what we can say, we have Asia to be filled also. So there's all the reason for price to want to gravitate through our stop loss. If we were to take this position, quite frankly, in the middle of nowhere, we can anticipate more than one reason why price is going to want to gravitate towards this area before finding that Friday rejection in terms of that weekly 50 EMA to close bullish above it. And then that would be the trade that I'd be looking to take, moving to break even and hoping for that rejection from that weekly 50 EMA. So I hope that makes sense in terms of not only looking at positions to trade, but identifying positions that would look fairly average in terms of good trade, great trade. However, you have to always remain consistent and professional in terms of what is the best position to take. And sometimes it just makes sense to sit on your hands and await for your higher probable setup to come to you. Now, thank you very much for listening. I appreciate the support in the channel and the communities in terms of FRGNT daily chart analysis. All the very best in your trading day, and enjoy your Friday. Take care. Ciao.